Hello Market Club members and traders everywhere. Adam Hewison here, coming to you from the digital studios of Market Club, and this is an ugly day for sure. We're looking at the S&P 500 spot market, and you can see we have a big down day right here. You can see boom, coming down. It's taking out these lows. Not a good sign. It's going to go lower in my opinion based on a couple of things. One, we're below the 50 line right here on the RSI, which is an indicator which is pretty cool. Once you go over a 50 line like we did here, you can see boom, the market went up, came back down, did not go below, came back up, and then finally sort of went below here, and then finally below that low again. We talked about the negative divergences this market had. We talked about those on Monday, and you can see quite clearly that they have had an effect. Now, a negative divergence is quite simply when the market goes down like this, but the prices are going just the opposite. So again, that is showing you a market that's losing momentum. Now, I want to show you today how you can measure using another tool, which is this tool right here, which is the Fibonacci tool. Very powerful, easy to use tool, and gives you some great insights into the market. So let's just clear the screen and go to the Fibonacci tool. So the Fibonacci tool, you just click here once, go to the highest point you can see on the chart, click once again, and then drag it to the lowest point you can see on the chart. And you can see quite clearly that we could get down to 1961. We're not that far from there right now. We're also possibly down to 1948, which is a 61.8% correction. The other one's a 50% correction. Now, what I want to show you, I want to scope this out just a little bit further because I want to share with you just a couple of things that I've seen. Now, if you look at these previous Fibonacci retracements, and let me just go from the high here down to the low, you can see it right on a 50% retracement right there. Also, if we go from this high here, drag it down to the low, also a 50%. So a 50% would seem like the logical place where this market should find support. And just to show you that level again, it's right around the 1961, 1960 level, I would say, is probably where the market should find support if it's going to repeat the pattern like we've seen here and here. However, things do change, and I think the one thing that I want to look at is when you scope this out, and I'm going to clear the screen and go all the way out, maximum to here. Now this shows you a couple of things. It shows you when the market hit its low point, which is in the first quarter of 2009 right here, and you can see really for 5.5 years we've been sort of going up. Eventually things run out of steam. And that's how it works. So let's just clear the screen, take this off right here. So we're going to measure from the very high point here all the way down to the very low. So that's when the lowest point of the bear market happened in 2009. It shows you if we have a 50% retracement, it takes us to 1343. In fact, let me just scope this out just a little bit further. Maybe you'll see that. 1343, and then we're 1185. So these are the numbers you want to look at, big numbers you want to write somewhere when you put on your computer screen somewhere and look at every once in a while as a reality check. So 1185 right here, and this one is 1345. Okay, so they're the numbers you should be looking at. This is a 50% correction right here, and this is a 61% correction right here. So again, they're the big numbers. This market would have to come down an awful lot to get to those numbers, but it's possible. We've been in a very long bull market. So let's take a look at the NASDAQ, which has really been getting hammered just lately. So here's a long-term view of the NASDAQ, again making its lows in the first quarter of 2009 and the highs just recently. So I'm going to put the Fibonacci tool on again from the highs all the way down. Now we're going actually back to 2009, the first quarter, so it's almost like 5.5 years. It's a long time. Now potentially we could see the NASDAQ get back to a 50% retracement, would take it all the way back here, and that is 2,933. So that's 2,933. 61.8%, which is the furthest we can expect it to go, is 2,531. So these are the numbers we would not be surprised to see this market get back to in the future. Now, it's not going to happen overnight. It's not going to happen next week, but these are the big picture opportunities we see for this market. Hey, I'm Adam Hewison, and I want to show you the Fibonacci tool and how cool it is and how you can use the same tool to trade and also use it for measurements. Very powerful and easy to use. I'm Adam Hewison I'll be back tomorrow. Weekend update. Have a great trading day, everyone.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.